IRA weekly webinar. Today we have Mr. Ryan Hughes joining us from Titan Bank to go over the importance of a non-recourse loan. We do work very closely with Ryan, so I'm looking very forward to his presentation today. But real quick, I am going to jump through, just some, announcements, housekeeping stuff here with Quest Trust Company before I do pass it over to Ryan. So we will jump right into that. So who is Quest Trust Company? Guys, we're the largest self-directed IRA custodian in Texas. We have 20,000 active investor clients across the country, $2 billion in assets under administration. So our clients are very active making investments. We have over 100 employees, okay, with 34 IRA service or certified IRA services professionals. You're looking at one of them right here. And we also have $350 million in undirected cash. Okay, so a lot of money that our clients are looking to just really send out. Quick disclaimer for you guys, okay? Quest does not provide any tax, legal, or investment advice whatsoever. So today, me and Ryan are both here for y'all's education, okay? If you have any questions, post a little comment in the box over here. I'm happy to answer any questions you guys have, okay? But today is just strictly for education. So first things first, real quickly, what is a self-directed IRA? It's important to understand that self-directed, the term, is truly just made up. It's a marketing term. It's really there to help you understand what we allow you to invest into. Okay, so some of the benefits that come along with, self-directing your IRA into private assets would be diversification. Maybe take some of that money into the self-directed world to purchase some private assets. If the market were to crash, it wouldn't really affect your whole portfolio, rather just what's in the market. Of course, the tax savings. You guys are real estate investors. When you go out and you buy a house, you fix it up and you sell it, we pay taxes on the money that we make as an individual. But if I do that same thing in an IRA, there are huge tax advantages that can come along with doing so. Social investing, you guys get to invest in your backyard, improve your communities. So that's another added benefit for you. And I think the biggest thing is you get to invest in what you know best. Most oftentimes we're told to just throw our retirement account into the stock market because that's the way it should be. But as I've mentioned, we are real estate investors. So, knowing that we can use those same funds and throw them into something that we are, knowledgeable in, can be a very big advantage for you guys. So we have 7 different types of plans that can be self-directed here at Quest. Most primarily, we see the traditional and the Roth IRA, these personal plans. The reason for that is most people, they get their retirement accounts from former employers. You might have a 401k with another company that you might happen to leave. I don't know, you fire, you quit your job, something like that. But then these funds become available, and most often they get rolled into a traditional or a Roth IRA, depending on the tax status of those funds. But there are other accounts that we also offer for you guys that can be self-directed. We have our employer plans, really allow for a higher contribution limit if you're a self-employed individual, and these specialty plans, which I think are fantastic. So please reach out to me if you guys have any questions on this stuff. The investment choices over here, the IRS just says there's 2 things you cannot invest into. It's life insurance and collectibles, things like antiques, old artwork, things that are really hard to put a value on. But as you can see here, this isn't, what you're limited to. This is just primarily what we kind of see over here at Quest. But the list does go on and on. So there's a multitude of things that you can invest into with the self-directed IRA. I always like to tell clients, if you have, a pretty unique investment, just come to me with the agreement for it. I'm more than happy to look it over and see if it's something we can hold for you. And here's your steps really to purchase an asset with the self-directed IRA. Step 1, guys, is to contact me and get your account opened up. We can find out which account is best for you. For now, I can waive all account opening fees for Roth IRAs through the end of the year. So you guys feel free to give us a call if you think you might be in the market for a Roth IRA. But from there, we just fund your account, and then you get to play quarterback. You go out and you find your investment, you bring it to us, and then we are going to take the necessary steps to make sure that we get this account funded. Number 4 says complete our investment form. So guys, we got a great investment client portal for you guys where you can actually just upload everything into the client portal. And then we have a representative kind of take it from there. And then the last step, of course, which is the best, Quest goes ahead and funds that investment straight to the title company or attorney's office we're working with. Here is this great client portal that we spoke about. If you come along as a client, you do get access to all this stuff. You can pay for expenses. You have ways to send documents to us securely. A lot of great stuff going on with this client portal, and we are continuing to improve, of course. And always, guys, we do offer multitude of education, just like the thing that we are on today. I'm going to pass it over to Ryan here pretty quickly, but feel free to reach out to or check out our YouTube channel, guys. This is actually being posted on YouTube as we're live today, so you can always come back and check out these videos as they are archived. And how to get in touch with us. This would probably be the easiest way. My email is right down here at the bottom, logan.onda@questtrust.com. You can give us a call at 855-FUN-IRAs. Just ask for an IRA specialist, okay? There's about 11 of us, just like me, on staff, which is really where your phone call should start. So again, 855-FUN-IRAs. Shoot us an email. We are happy to help you guys out, okay? So I'm going to bring in Mr. Ryan Hughes here with Titan Bank. Ryan, can you hear me? I want to make sure I can hear you.
I can.
Fantastic. All right, man. Well, I'm going to bring in your PowerPoint. Looks like we have a blank screen here, but I know we got it figured out just a moment ago. But once we get that up, man, it's all you. There we go. All right, Ryan.
Thank you very much, Logan. So welcome, everyone. And, I wanted to introduce myself. So it's Ryan Hughes, as Logan mentioned, with Titan Bank. We definitely have a lot of clients from Quest that we help out with, and we specialize in the non-recourse loans, as Logan mentioned. I'll go into a little bit about Titan. We've been around since 1907, and we're a federally chartered bank. So we are FDIC insured up to $250,000. So we're when I say federal, we can lend nationwide, all 50 states. So I'll go into a little bit about that, and if you have any questions, just you can definitely post them in the chat button. All right. So like I said, FDIC can, let's see. Sorry about that. I don't know why my slide is not.
Try that little arrow down at the bottom.
Oh, there we go.
I'm not sure if it's going to make you do it that way.
There we go. Sorry about that. All right. We did work on that earlier. So like I said, we are FDIC insured. 1907, our bank charter was created, and we've actually, our partners have owned the bank since about 2008 after the financial crisis. So just a little bit about Titan there. I'm going to get into the nuts and bolts of the actual non-recourse loans. So there we go. All right. Okay, just a little bit. We originated a little over $2 billion in commercial and real estate loans. So we've done quite a bit of business in the actual lending platform. All right. So non-recourse loans. So they are tailored for the solo 401k and IRA LLCs. That's why they're non-recourse. You cannot do a traditional loan with your IRA LLC or a solo K account. So, and what that means is there's no personal liability. So I'm going to go into kind of a little, can everyone see that? So the recourse, typically they're a little lower rates, longer term, more traditional. We can seize a property. Your personal assets are liable, garnish wages. So that's more your Fannie Freddie type lending are the recourse, which, I'm sure everyone's aware of. The non-recourse, they are, typically, ours are pretty competitive, but they're, usually about a couple points higher than the conventional type lending that you may be accustomed to. Typically, normally it's a shorter term, on the other conventional products, you can go, 30 years, sometimes even longer. On the non-recourse, typically they're anywhere from 20 to 25-year amortization. So it's a shorter term product than what you may be accustomed to if you're doing just your personal home. And then, so we still can go, actually seize the property, but there is a higher risk to the lender since there is no personal liability. So that's what, the non-recourse just means, really there's just no personal liability. We can come after the property itself. And that's because it's, it's tied to a self-directed or, the retirement IRA LLC plan. Sorry about that. All right. So there's some terms that are offered on the non-recourse loans. Like I mentioned, they are a little shorter amortization. The max is 25-year amortization. We actually just increased that from 20 to 25 in the last month. And then you can do, typically, most of my clients, that we talk to, we'll do a 10, the 10-1 arm, and on the 20-year amortization. That's a pretty common term. They like the shorter term. Get build additional appreciation, as well as the 10-year ARM is typically a much more aggressive in terms of the pricing and the rates on that. And you can do the 25-year fixed product as well. But again, I usually recommend the 10-1 ARM on the 20 or 25-year amortization are the best products. So that's what we currently offer. This is what Titan offers. There are some other lenders out there that may do, obviously offer different products. But we're each lender is a little unique. 25 years is pretty much the max I see on the non-recourse loans. I don't typically see anyone doing a 30-year amortization. All right, there we go. So hopefully everyone can see that. It's a little small on my screen. So the loan to value. So the loan to value is based off the purchase price or the appraisal, whichever is lower. And so it's between 50 and 65%. Again, that is different than your typical, conventional lending where you can go 80, or on a primary residence, obviously go 95 or 90 or 97. So it is a lower exposure rate for the bank, just because it is higher risk. So you just be prepared. You do have to put down more money out of your IRA, LLC, out of your plan versus what you may be accustomed to as well. It's we do residential 1 to 4 units, and then the good thing is we also will lend on commercial loans. So if it's a little more underwriting on that, but we're one of the only lenders out there that will do the commercial lending. There is a higher minimum on those. The 1 to 4 units and the single families, we go down to 60,000, which is very low. A lot of the lenders are, the ones that are out there have a minimum of 150 or 250. So we will look at some of the smaller loans. So if you're in certain markets that have that, not necessarily there's some markets obviously you can't get below the 150 mark, but we will look at that up to 1 million. I can go above 1 million. Just you'll need to just reach out to me when you have those type projects, and we can consider that. But there's a additional underwriting involved on those because they're considered the commercial loans. So, all right. So there are some property restrictions, and I do want to preface this is our guidelines, but we sometimes we can look at things and we can possibly make exceptions. I don't want to say that's fairly uncommon, but there are some restrictions on these. The year of the property, and then of course we tend to stay away from the condos. So this is and I can just reach out to me if you have any questions. The mini storage, multifamily, the manufactured housing, and we do not do any of the fix and flip properties. So that we really want to buy and hold long-term rentals, and that's what the type of loans we're looking for. There are no prepayment penalties, but we definitely we're not looking at where you can go off the after rehab value. There's so if you're looking for those type of loans, unfortunately we wouldn't be able to accommodate those. I'm just seeing if there's any questions yet. And Logan, I guess we'll come back to the chat feature towards the end. Is that?
Yeah. I don't really see any questions right now. Somebody's asking for your contact info for sure.
Okay. Perfect. I'll provide that, absolutely. So I'll go ahead and put that in there.
Great. When I'll pop in here interchangeably if we got some questions popping up for sure, though.
Okay. Perfect.
Great.
So some of the other requirements. So the DSCR is the debt service coverage ratio. So what that is, we want to see 125%. So that's of the payment. And if your payment on the principal and interest payment is $1,000, just say $1,000 for round numbers, we want to see the net income on that property at $1,250. So that's what the DSCR stands for. We do want to see a current lease typically in place. We can look at the market comparables as well, But normally we want to see if there's a lease in place on that property. If not, again, we can look at the comparables on the appraisal. Escrows, we do want to see escrows on the loan, and then reserves. The reserves typically are around 15%, so it's 15% of the loan amount. So that's where we want to see our actual reserves. Sometimes we may want a little more, just depending on the project, but normally it's 15%. And then we do want to see a management company if you have experience and the sponsor has some experience on it. Normally it's better to have a management company, especially when you're dealing with an IRA, because you're supposed to be removed from it. That's something that I would refer you or back to Logan and his team to talk about, because we don't really get into the prohibited transactions or anything like that. That's what Quest is for. But definitely confirm with them about that as well. And the deep financial statement, that's just a profit and loss. And then we do calculate a 10% management fee and vacancy factor. So if we have to take the property back, we're going to figure a little higher on that than probably what you're seeing in the market, especially in a lot of the markets today. The vacancy is very low, and some of the management companies are allowing a lower than that, but we don't have the resources, and we're just we're gonna pay probably a premium if we do have to take the property back. Sorry, I don't know what I did there.
Did it shut off on you? I did have a question real quick, Ryan. I know that at the beginning you mentioned solo 401ks or IRA LLCs. Do y'all guys lend directly to just like a self-directed IRA, correct?
We do. So we will lend to the actual IRA, that LLC itself. And the good thing with Quest clients, we're going to make an exception so we'll lend to all their clients, even if you're not a Titan customer, which we don't do. So that I was able to get that approved with our owners. So we will consider that, and we're not going to have you open an account with us directly.
Fantastic. I do have one question right here in the chat box. He's just asking what your current rates are.
So good question. The rates typically, we go off the Treasury index. So we go off the 5 or 10-year Treasury, depending if you're doing a 5/1 arm or a 10-year arm. And normally, so you just take the Treasury index, which is sitting around 1.14, 1.15 right now on the 10-year, and then you just add. There's a 4% margin typically that we add to that. So you're looking at the mid to low 5s right now on an arm, and then the fixed products are typically sitting around in the 7, high 6, low 7 range.
Currently. Yeah, is that pretty typical?
It is. I mean, there's some people doing 8, 9%, and there's others that are advertising 4.5. I mean, we don't bait and switch. So what we tell you is what we're going to give you. I've only had in the last over 3 years had one loan that I couldn't do and that was just because there was a federal tax lien. So we do look at the credit worthiness of a client. Mm-hmm. Even though there's no personal liability, we will look at that as well. Just some of the due diligence there, just to make sure that the credit worthiness is there from the sponsor of the plan. So.
Understood. All right. Well, did you have more of your PowerPoint you wanted to run through? I know it looked like it shut off on you.
I guess I thought I had more in there. I guess I ran through that a little too quick, but I did.
That's all right.
So there are appraisals required on these as well. So we do an appraisal. That's typically the longest delay. So a lot of times, clients ask, what is the turn time on these? And, we can underwrite, fairly quick in house. It's just usually the appraisal that's the delay in certain markets. So what we'll do is, like I said, we underwrite, everything's in house. There's pretty minimum documentation that we need. Obviously, execute a purchase contract, and we do the appraisal, title work. So all that is similar to a traditional type loan, mm-hmm. except that we do want to see. We will ask for some personal financials, even though there's not the liability. We will look at that as well, just because we don't have really different underwriting guidelines, mm-hmm. In terms of what we have as a bank. But so our underwriters will pretty much do it the same way, and then we'll go ahead and base the approval on the property itself, on the actual rent itself.
Understood. Well, if you think there's anything else important that our listeners should be looking out for, just things to keep in mind, I would leave them with that. I know Mr. Andre here in our comments would like to have your contact info, see how they can get a hold of you. I'll be happy to type that in there for us.
Perfect. So my direct line is 214-580-3187. It's a good question. I see that pop up there. So 214-580-3187. And again, it's Ryan Hughes. And so my email is rhughes, it's HUGHES @titanbank.com. And then the closing costs. So the closing costs, are similar to, to a conventional loan. You're going to have the third party fees. You have, so our closing costs usually are sitting around 1.5 origination on the loans. And so whatever the actual loan amount itself is, that's what we have. And then we have an $800 for underwriting. And then, so then we have a $250 for the doc prep, which is the attorney. That goes to a third party attorney. And then you'll have your title fees, appraisal, any other third party fees that, fairly standard, any, attorney fees. And that's a big thing. We do lend nationwide. So we lend in New York and New Jersey. So we'll there's very limited lenders doing that as well.
Gotcha. I thought you guys were just in Texas. So that's news to me. That's awesome.
No, we will do it nationwide. I got loans closing, like I said, Long Island. I have them in California. So Texas, of course, Tennessee, and we're all over the place. I mean, certain markets were a little more aggressive, obviously in our backyard. Arizona, Texas, New Mexico, Colorado, California were probably a little more aggressive, and then some of the other states where the lending laws are a little more restrictive and their foreclosure laws, we're going to follow that as well in terms of our loan to value. So that's just going to be the 50%, 55% is going to come in some of those states.
Right. Thomas is asking like a 30, 45 day close with the question mark.
So I've closed them in 3 weeks, but yeah, that's typically you want to give a 30 to 45 days close. And I know that's a problem especially what's going on in the market, certain areas. Some clients will actually pay cash for the property, and then we can do basically a refinance and fund back, the LLC, the IRA. Logan, I hope that's, again, we do it. I don't know if that's any issue there in prohibited transaction wise, but it just funds back into the IRA.
As long as we're not buying something from, our parents or, buying a house that we plan to have like our kids go live in or something, we typically don't see any prohibited transactions when dealing with a non-recourse loan. Typically, that just shows us that honestly people are doing the right thing.
Yeah, that's I think a good point. Be careful. I've had some clients that have reached out to me and they were with a bank and they didn't realize the bank, put personal liability on it, and they did a recourse on an IRA that got them in a world of trouble. So just, that happens. They'll quote you and they don't tell you. Then you get to closing and all of a sudden it's a recourse, and then I get the phone call and say, I need to close, and that does happen. I see that quite often, actually.
Yeah, that's what my real estate transactions team is definitely trained up to be looking for things such as like non-recourse language. So we know that if we are receiving financing, that's something we're on the lookout for. So hopefully here at Quest that wouldn't be an issue for any of you guys. But it is a great point from you, Ryan. Absolutely.
And the land, so I had that on the slide earlier. I don't know if everyone saw it, but lands, we stay away from land, just land deals. It has to be an income producing property. That's important. And, even if it's a farm, where there's wheat and soy, and we don't typically, we won't lend on those. Again, I mentioned the fix and flip, but any major rehab, we won't lend on those as well. So if there's anything greater than 10% of the property that you're in terms of major rehab, we're going to stay away from those properties that need that as also.
Yeah, well, it looks like Thomas got all of his questions answered, so we appreciate that, Ryan. Is there anything you want to leave us with, man? It sounds like we kind of went through everything you got for us.
I went probably a little too fast on that, so that they're not complicated, and just the best thing to do is reach out to me. I have a 1-page worksheet, and I can provide that to Quest as well. And Logan, you can, if you want to, feel free to share it. It's a 1-page property worksheet, just property details. the one thing I want to let everyone know is to make sure you put the actual, get the comparables, get the rent comparables. Don't, actually, if you are a real estate investor, you know that we base our decision off of the actual rent and the property taxes. So if I don't get the information up front, then I'm not able to really give it the proper qualification and pre-approval. So we don't just that's important to have the accurate taxes, insurance, HOA fees. Those are what we'll need up front to go determine what we can lend on.
Right. Well, great, Ryan. I mean, I appreciated the presentation, man. We'll continue to work closely, of course. So we appreciate having you out, and definitely send me that little workbook thing. I'd be happy to have that because we're sending out your information quite often. So.
I will definitely. You can call, text that number, that 214 number that goes directly to my virtual office as well. So when I'm away from the office, I get it. I know how important it is, especially if you're out on the weekends. Definitely reach out to me. I understand. It's the time is the essence. So if you need that or just have a question, just don't hesitate to call me, and I can definitely help you, and I can usually give you an answer fairly quick if we can do it or not. So.
Great. All right, everybody. I do have Ryan's information over here in the chat box, but that will be it for today's webinar. Tonight, we do have our happy hour, so go ahead and join us this evening if you got some time. But Ryan, we really appreciate having you, man.
Absolutely. Thank you.
Yep. All right, guys.